Welcome to the world of crypto options, one of the most powerful and misunderstood instruments in the entire crypto market. In this video, part 1 of our crypto option series, we'll break down what options really are, how they differ from futures, why professionals use them to hedge or speculate, and finally, how they're taxed in India so you don't get a surprise from the income tax department later. Let's start with the basics. An option is simply a contract. It gives you the right but not the obligation to buy or sell an asset at a fixed price within a specific time period. You're not betting on the current price. You're betting on what the cost could become in the future. There are two kinds: call options and put options. A call option gives you the right to buy at a chosen price. You buy it when you think prices will rise. A put option gives you the right to sell at a chosen price. You buy it when you think prices will fall. So, a call option equals bullish. A put option equals bearish. Example time. Suppose Bitcoin is 50 lakh rupees and you expect it to reach 60 lakh rupees in a month. Instead of buying one whole Bitcoin, you buy a call option with a strike price of 52 lakh rupees and pay a small premium, say 1 lakh rupees. If Bitcoin actually hits 60 lakh rupees, your option becomes valuable because you can buy at 52 lakh rupees while the market trades at 60 lakh rupees. An 8 lakh rupee gain minus your 1 lakh rupee premium, you just made 7 lakh rupees profit without owning a full Bitcoin. If Bitcoin doesn't move, you don't lose more than your 1 lakh rupees premium. That's your maximum loss. That's why options are powerful. Limited loss, unlimited potential gain. Now let's flip it. If you think Bitcoin will fall, you buy a put option that lets you sell at 48 lakh rupees. If the price crashes to 40 lakh rupees, your put is worth 8 lakh rupees. Again, your downside was only the premium. That's how smart traders hedge portfolios, by owning puts as insurance during market crashes. In futures trading, you're obligated to buy, bet or sell at expiry, which is why liquidations happen when the market moves against you. In options, you have a choice. You can walk away. No liquidation, no forced loss. But options pricing involves more than direction. It depends on time, volatility, and something traders call the Greeks. We'll decode that in part 2 of this series. Now, let's address the most overlooked question. How are crypto options taxed in India? This is where things get serious. The Income Tax Act doesn't have a dedicated section for crypto options yet, but under current rules, trading in crypto, including options, is treated as a virtual digital asset (VDA) activity. If you trade on a foreign exchange like Deribit or OKX or on an on-chain protocol such as Hyperliquid or Lira, your trades fall under the Finance Act 2022's VDA rules. Here's what that means. Every profit you make from buying and selling crypto options is taxed at 30% flat under Section 115 BBH. There is no deduction allowed for expenses other than the cost of acquisition, which usually means the premium you paid to buy the option. And yes, there's also a 1% TDS, tax deducted at source, on every trade executed on Indian exchanges that comply with VDA regulations. Foreign dexes don't deduct TDS automatically, but you're still legally responsible to report and pay it yourself. Losses from crypto options cannot be set off against any other income, not even against stock market gains or salary. They also cannot be carried forward to the next year. So let's simplify. If you made 1 lakh rupees profit from a Bitcoin option trade, your tax liability is 30,000 rupees. If you lost 1 lakh rupees, you can't adjust it anywhere else. That's the harsh reality under Indian VDA tax rules. However, if you're trading crypto options that are physically settled, for example, options on tokenized assets, or on an exchange that classifies them as derivatives under Indian jurisdiction, there's still some legal ambiguity. Many tax experts expect the government to issue new guidance soon, but as of 2025, flat 30% tax plus 1% TDS remains the standard rule for most crypto options trades. That's why using KoinX is essential. Our platform automatically tracks every options trade, premiums, settlements, profits, and even cross-chain transactions, and prepares accurate tax reports following Indian CBDT and VDA guidelines. Whether you are using Binance, CoinDCX, or on-chain DEX like Dopex or Hyperliquid, KoinX consolidates everything into one clean tax summary, so you stay compliant and stress-free at the end of the year. So, the takeaway for part 1 is simple. Options equals power with protection. They let you profit from market moves while limiting downside, and they are the building block for advanced strategies we'll cover next. In part 2, we'll explore how crypto options are priced, what influences the premium, how volatility impacts it, and why time decay can silently eat into your profits if you're not careful. Make sure you subscribe right now so you don't miss it. I'm Punit from KoinX, and this is your Crypto Options Masterclass series, simplifying the smartest side of crypto trading one episode at a time.